Excuse me. Jeez. All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. So we got to get started with our analysis. Let's go through the euro dollar. Still trying to shake off whatever I got last week. It's all right. It's part of having kids. All right. So here's the euro dollar. All right, so the euro dollar, it stretched beyond 110.50 overnight, and I was surprised. I'm surprised we actually we took stops above there and then came all the way back down. Like Paul said, and I agreed with him. I thought this was it. I thought, oh, we're just going to be range bound. I thought we were going to be between 110.50 and 109.30 and just kind of bounce around there for a while. But we took out the 110.50 just barely again, and we're pushing back down towards now it's looking like 109.30 is going to be where there's some support. I think this is going to be a really key range. I wouldn't be surprised if this is what we see over the course of the next 24 hours. We see something like this, and then back over here like that. Okay, ahead of the FOMC. I'd imagine this false breakout leads to at least a move down here, and then back to mid-range. That would be my best guess on what's going to happen. So what does that mean? Well, what that means is that any dip down towards 109 and a quarter, 109.20, 109.30, you probably want to look for a long if you guys want to play the dollar to the short side. Okay. Let's go over to, let's see, 109.30. That's going to be key support. Don't be surprised if we come down there and we break it by a few pips. I mean, that's just kind of what the market's been doing, is just taking out. You can see how we've taken out the highs now by a couple of pips each time. Don't be surprised if we come down here and try to whack the stops below the lows, especially over the next 24 hours. But like I said, I do expect this to stay pretty much mid-range, and resistance at 110.50 to hold. So, or the highs overnight, which will be 110.60. So remember, support and resistance is not an exact science. It's an area. So that area is probably going to offer strong support and resistance. Excuse me one second, guys. All right. All right, let's go over to the cable. All right, so here's the pound dollar. Pound's been in a really tight trading range. You can see how important the support is. We wrote that down yesterday. It's 151.10. Obviously, we came down to 151.07. So I mean, we were off by 3 pips. Obviously, that's basically support. The key resistance up here is that we're dealing with this downsloping trend line, and that last week we talked about 151 and a quarter. That's the whole reason why I shorted the cable up there on Friday. And that trend line's downsloping. It is a descending wedge, which eventually, I mean, if we're going to play into this range or play into this pattern, eventually it'll break higher. But that we could do this, sell off, bounce, sell off, and then eventually then break. If this chart pattern continues like a descending wedge, what I will point out is that key resistance. Okay, key resistance right now is 152. Well, I mean, I would say probably 152. We might have this little head and shoulder pattern that might play out back to 150. It's all possible, but 152 should probably cap us for today, I would think. Even if it's a weak CPI reading, 152 should cap us. 151.10. Okay, let's go over to the Swissy. So the Swissy's held up actually pretty well, which I'm happy about down at these levels. Obviously, 98 cents is huge. It's a 618 retracement, um, and you'll notice that we're trying to pop above this this down sloping trend line. But it's not just the Swissy. I mean, you can look at the Swissy and go, "Whoa, Swissy's really held that 98 cent level," which we can just write down, like 98.00. Okay, it's a 618 retracement if you don't know that. Low, high, 618. Okay. Now, the thing about the Swissy though, it's not just the Swissy. Look at the Euro Swiss yesterday. Look at the hammer that it created. And we were down at like 107.60, bounced all the way up to 108.30. I mean, that's an 80 pip bounce for the Swissy, or excuse me, for the Euro Swiss. That's a big move. Okay, that's a big move. So, it's not just, like I said, it's not just the Swissy. It's a Swiss pairs. Pound Swiss got a little bit of a lift, even with the pound being so weak. The pound Swiss got a little lift. We did a false breakdown below those lows and then pop back up. Let's take a look at the Swiss yen. So you can see the Swiss yen, tried to rally yesterday and then failed, came right back down. So, it's not just a dollar Swiss story. It's more of a Swiss story. Okay, so resistance now on the way back up will be probably that low. That spike low comes in at 98.75. It's also a high from right there. $98.75, couldn't quite make it up there that time, so $98.75, that should be pretty good resistance today. We can clear that. We might get a little bit more of a squeeze. Let's go over to the yen. Okay, so the dollar yen is approaching its 121.35 resistance. You guys might remember that from yesterday. It's basically right here. Okay. Now you guys know that this support right here is huge. I mean, ginormous. And this is one of those currencies that one of those pairs that has to be on your radar for tomorrow. Dollar weakness, if it comes, dollar weakness can come in several different forms. Okay, one of the forms that the dollar weakness can really come in my opinion, is the dollar yen. And it'll seem like, oh my God, here comes some dollar weakness. The dollar weakness is coming. But remember, if it's the dollar yen, it means something more than just dollar weakness. Okay, if the dollar yen is selling off, that means stocks are not having a good day, if you will. Stand by. Sorry, guys, just gotta blow my nose quite a bit. So if there's dollar yen weakness, that could very easily be translated into there's equity market weakness. So if you're looking at the dollar yen, I mean I have an alarm that's set. Obviously that's why this big yellow line. But obviously this 120.20 huge support. If that breaks tomorrow, the risk is that you may not only just see dollar yen weakness, you may see all sorts of yen strength, like euro yen weakness, pound yen weakness, Aussie yen, New Zealand yen, any other, just you might see like just yen strength in general, and all the yen pairs fall. And if that's happening, the question is, will equity markets be falling at the same time? All right, so for today, though, I mean, we don't have to really worry about that today, but for today, same numbers apply, 121.35, 120.20, okay? If you want to short the dollar, if you really think the dollar is going to fall tomorrow following the FOMC announcement, especially if the Fed raises rates and the dollar is going to sell off, then the dollar yen is probably the place to trade. That's the currency pair to trade. Okay. Um, let's go over to the dollar yen, and resistance is going to be 121.35. 120.20, major support. Okay. Let's go over to the US dollar Canadian. Here's the dollar Canadian. Now, crude oil is pulling back a little bit. Okay. And what's interesting with this pullback in crude, and you might have seen crude just, I mean, we just pulled back, what, I want to say a percentage point? Yeah, we were up 1.7%. We're only up only up 0.6% right now. I'm surprised the dollar Canadian hasn't bounced more. So what that means to me is that that this pullback in crude is probably just a very minor pullback that you're seeing, okay? Because the Canadian's not responding to it. So the reason why I say that is that if that's the case, and crude starts to bounce again, the Canadian could pull back to this 136 and a quarter. Now, I've been short this a couple of times and made some good money actually being short the dollar Canadian the last couple of days. I'm not short the dollar Canadian right now. I'm just short the Euro Canadian and the New Zealand Canadian. And frankly, this doesn't, I think the dollar Canadian can come right back down to 136 and a quarter. I think it's very possible. 13625. Okay. Now, obviously, resistance is going to be right here at 137. 137. You can write 137.80 if you want, but really, it's 137.60 is going to be key resistance. It is bullish. Okay. Still, I know. I've been fading it, trading counter trend. I understand that. But it's still in a very bullish trend. You can't deny that it is. I think that there is scope for a pullback, but I don't think the pullback is going to be too major. All right. Hold on really quick. Let me take a look at the. Yeah, I mean the Euro Canadian, I'm up 104 pips right now. The New Zealand Canadian, I'm only down 40 pips. And this Canadian is still strong despite the despite the dip that we're seeing in crude right now. Surprisingly, Joe asked, "Am I a buyer the U.S. dollar Canadian 136 and a quarter?" I don't know. I don't know if I want to trade much dollars between now and the FOMC. Joe, I don't know if I really want to trade too many dollars. I shorted the dollar yen about 10 pips ago. And I'm long the dollar Swiss right now, and that's it for dollars. I'm not really comfortable trading the dollar much more between now and then. If the Fed wasn't meeting today and tomorrow, I'd probably be looking to buy the dollar Canadian at 136 and a quarter. If but the Fed is meeting, so that's not the case. All right, let's go over to the Kiwi. So the Kiwi, we have this, as you guys know, we have this big inverted head and shoulder pattern. It's huge. We've been discussing it the last couple of weeks, right? We also had this inverted head and shoulder pattern that's played out, shoulder, head, shoulder, that's played itself out. We can delete that now. It's been long enough. Hold on. I'm just trying to delete some of the stuff. All right, I'll just redraw that. Okay. High to low. Still struggling with the 786 retracement, even though we spike up. It's, these you can see it's happening as, divergences in relative strength. We're rallying and, just getting a divergence here. Um, well, as you guys know, this yellow trend line here that's been holding. I don't know if we're going to make it all the way down to. I mean, we could. I guess we could make it down to 67 cents today, or back to 66.90, but that'd be a hell of a pullback for the Kiwi. I just don't really see that happening at the moment. Um, I think if we break through this 107 or 67.50, I'm sorry, we break through this 67.50, that's probably going to expose a move back down towards the to 67 cents. Um, because as you can see, we've been grinding higher. We've been grinding higher, making higher highs, higher lows. So if we, obviously if we change that pattern and we break through the 67.50, that's probably going to expose some downside. Like I said, it's been a lot stronger than I had imagined it would be. Michael says the market perception is that Kiwi has been undervalued, plain and simple. You know, eh, yes and no. I actually don't see that. I don't actually see that. I see the Kiwi is still very overvalued, especially in terms of Antipodean currencies. I think the effects of the China slowdown has yet to take really been priced into the Kiwi as much as it has been in the Aussie. I actually think that the Kiwi should still underperform, relatively speaking, on a dollar weighted basis. Um, but that's again that's my point of view. All right. Um, resistance 68 and a quarter. We're still in a range. All right, let's go into the Aussie. We're going to do the Aussie really quick. I'm going to give you guys a little bit of a break. Okay, so here's the Aussie, and we have a nice little head and shoulder pattern trying to play, which means that support right here is at 72 and a quarter. It's I don't like looking at I don't like looking at head and shoulder patterns when we're mid range like we are, but I mean it's pretty visible. You can see it right here. There's a head, shoulder, neckline, which I'm not really happy about either. I don't want to see the Aussie come under too much pressure, but um, tight consolidations. So 72.20 should offer some pretty good support. It's a breakout point there. You can see that spike there. I'm going to write down 72.20. It's a 50% retracement. We get below that, we may attack this major. This is, by the way, major support for the Aussie, in my opinion, right through here. So 72.20 for today. I mean, I know it's pretty close, but that's support for now. Okay, resistance at 72.80. Tight ranges here for the Aussie. Nothing that I see here really excites me too much about it. All right, we're in a range. When I come back, we're going to look at the dollar index. We're going to look at, actually, you know what? Let's do the dollar index right now while we're here. Then when we come back, we'll do the peso. Let's check this out. Now we drew this out yesterday. I don't know where our trend line went, but it's not here anymore. So I'll just draw it again. That's pretty important because this is right here. This low is a 50% retracement, if I'm not mistaken. Hold on, one more. It is. It's a 50% retracement. That comes in at 97.15. Okay, so with that being said, resistance is at 97.70. Okay, we're in a tight range, guys. 97.15, which is the 50% retracement, and then 97.70, which is the downsloping trend line, and horizontal resistance, which the dollar could break today following the CPI data. But you know, I think it's the moves are going to be fairly limited. All right, guys and gals, don't go anywhere. I'll be back in just a few moments. When I come back, we're going to do the peso, which has obviously been moving, the Norwegian krona, the Swedish krona, so don't go anywhere. Hi, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. So we're going to wrap up just doing the peso, the Norwegian krona, the Swedish krona, see if there's anything going on there. So here's the US dollar Mexican peso. And, you know, I think one of the things that, here, actually, let me delete all this stuff. One of the things that I think we should recognize here in the US dollar Mexican peso, first and foremost, I'll put in the trend line, which is key. I mean, it's critical no matter how you slice it. That's right there. That defines, you know, it being, you know, bullish or bearish. Okay, right there. All right, it's bullish. But one of the things that I have to point out is the lack of ability to surge much higher. Okay, now that doesn't mean it's over, and that doesn't mean it's not going to go any higher. But what that means is you can see the hesitation here, and you know, I'd be a little careful being on the long side if you're trading the long side. Now, does that mean you should short it? I don't know about that. I mean, you know, it's ahead of the FOMC. How about if crude oil doesn't bounce? You know, how about if crude just, you know, starts to sell off? I mean, there's things that could alter this picture really quick. So I think you're probably the better trade right now is to stay sideline, but you know, with the US dollar Mexican peso. But one of the other things I guess we can point out is, you know, perhaps there's a nice little flag pattern, something like that. All right, that's, I mean, it's obviously, you know, very strong. Actually, probably do it like this, be more relevant. Just be careful. You know, I don't see any you know, real edge to trade the peso at the moment. Here's the Norwegian krona. It's very similar setup in the Norwegian krona because you can see we're getting false breaks to the upside. We had false breaks to the downside. Obviously, if crude continues to bounce, it's going to the Norwegian krona. But one of the things I have to point out about the Norwegian krona, though, and you know, I have a lot of people that argue with me regarding the Norwegian krona. All right, do you know? And Jonas is actually listening in from Norway. I mean, dude, there's Norway, aside from the cost of extremely expensive liquor, you know, there's a lot of great things about Norway. I mean, Norway is one of those countries countries, if you guys just had some sunlight and some warm weather, probably you'd be flooded with people. Um, People would argue it's probably one of the best run countries in Europe. Um, but look at its currency. And one thing that I have to point out is even as even as the crude oil bounce, when it made that bounce to up to like $60, it had very little impact on the Norwegian krona. I think this is what we saw. Let me overlay it with crude. Oh, I'm sorry. It was this one. So when we had the bounce in crude to 60, I mean, I guess it did pull back the Norwegian krona a little bit, and then we had that bounce again in crude, and bounce back to like 50. I guess it did pull back the Norwegian krona, but I mean, the bounces that we see in crude oil don't have too big of an effect on the Norwegian krona. So it makes me believe that there's something bigger at work here. I gotta imagine there's somewhere where the Norwegian krona is going to pull back. But like I said, I don't see like a huge edge here. It's like, oh, I don't see a technical setup that says, well, I should be shorting it or I should be getting long. Not yet, anyway. We could very easily be developing some sort of like ascending wedge. It might look like this or something like this. Okay, in the future, but right now, I mean, other than making some stabs up here, I'd rather be on the long side on any dip. You know. Jonah said rate meeting on Thursday in Norway. No cut expected. Now Jonah lives in Norway, and yeah, the Norges Central Bank does meet on Thursday. I did remember reading that over the weekend. Um, but like I said, I don't think there's an edge here, buying or selling it. Unless you get a severe move in crude right now, you might be able to scalp it a little bit here and there. But here's the Swedish krona. Swedish krona is really at pretty key support here, right? 840 and 860 is what we've been writing down. 840. Look at how important 840 is. We hit it and bounced like it was nobody's business. Bam! We wrote that down yesterday, right? So I guess we should write it down again today. Maybe if it gets up to 860, it's a good short. 840. I think it's 861 actually. Let me double check that. I'll just write 860. All right. Leave that in a range. And we removed the peso because I just don't see any reason to really trade the peso where we're currently at. But that's it. Okay, I'm going to leave that for you. All right, let me go into some of your questions really quick. Remember, we have Ed Matz joining us in about 20 minutes. So that'll be really exciting. Let me see.